Moving ahead with the next session on trends, opportunity, and challenges in trade securitization by Mr. Pratik Modi, Director Sales, Veefin. Can we have a big round of applause for Mr. Modi? Mr. Pratik Modi is a seasoned leader with over 18 years of expertise in corporate sales for banks and fintechs. Pratik Modi excels in driving growth and innovation in supply chain finance. As Director of Sales at Veefin Solutions, he spearheads transformative strategies, fostering partnerships that redefine financial ecosystems and deliver exceptional value to clients. Over to you, sir.
Good morning, everyone. I hope I'm audible loud and clear. Right. They often say that the only thing certain in life is death and taxes. But I'm sure as CFOs and finance professionals, we all agree that chasing receivables should be added to that list. Let's discuss how to turn that chase into a super sprint with trade receivable securitization. Before I jump into that, let me take you through Veefin, what it is, and its journey. Veefin Solutions Limited started 5 years back. We started as a tech service provider, providing our tech stack to banks and financial institutions for them to onboard their customers, underwrite them, manage their transactions, and collect better. 5 years into business, we got listed on the BSE SME Index mid last year. We have disbursed $25 billion in annual recurring revenue till date. Veefin Solutions has now become Veefin Group of companies. With 4 acquisitions, strategic acquisitions in the last 1 year, we have a varied range of product offerings, everything revolving around supply chain finance. The tech stack for supply chain finance, trade securitization, which I'm going to speak on today, AP and AR automation, collections module, PSB exchange, fraud and risk, and transaction banking. Veefin Group is now a family of more than 500 plus customers worldwide. Highlighted on the screen are a few names from a large list of customers. I wanted to share in the past 5 years, Veefin has attained multiple rewards, recognitions, and accolades. The highlight of this slide is that we have been awarded the best performing company in SME 2024 by Bombay Stock Exchange. Let us now get on to the discussion for the trade receivables or dealer receivable securitization and how it adds value to corporates. We all understand that supply chain finance as a product has been an offering by the banks for many years. There are certain challenges that the banks face when offering a supply chain finance solution. Typically, as we all understand, when we do our sales to dealers and distributors, there will be a lot of sales which are done to SMEs and MSMEs. Now, banks have a specific criteria. They do an individual underwriting and onboarding of the customer, which obviously takes a lot of time. Some of these supply chain finance solutions do take at least a couple of years to scale and get it to 100%. If not 100%, at least to a reasonable amount of a 60 or 70%. Plus, they want a ticket size, which is palatable to them, where their cost of acquisition is lower than what they are going to gain out of onboarding that customer. Now, why am I saying this? And what brings trade securitization as a value to corporates? Point number 1, it is a complete off-balance sheet solution for corporates. Point number 2, it becomes a complete non-recourse solution for the anchor. And it is a concept of pool where we get away with the individual onboarding and credit assessment of your dealers or your customers, which could be small, which could be MSMEs, which may be unrated also. Hence, this entire solution becomes extremely scalable. While I'm sure in your finance history you would have seen that a channel finance solution takes a lot of time to scale, this becomes immediately scalable. I'm okay to take questions as and when they come. So if you have any questions, do stop me and you can ask me a question. We'll take a look at the transaction structure on why the trade receivables add value and how the transaction is done. As you see on the slide, the anchor or the seller, once they sell their goods to the buyer, who could be a customer or a dealer distributor, which could also be an MSME or an SME, once they accept the invoice, the anchor will then sell the receivable pool without recourse to a bank or a factor or an NBFC. Now, the anchor then issues a FLDG or some kind of a credit enhancement, post which, once the seasoning has been done, the bank will now assign receivables to a trust or a special purpose vehicle that will be created by us. The entire pool of receivables gets rated by a credit rating agency. We find investors and issue pass-through certificates for them to participate in this transaction. The highlight over here is there is nothing that changes for your buyer. We could create a trust and retention account for them to make a payment back on the due date, or we could also make the anchor as the collections agent, collections and the servicing agent, so that there is nothing virtually that changes for your customers. I'll just take a pause over here for you to absorb this information, to have a look at the slide, and I'll take any questions as and when they come. Sure. Right. So FLDG is like a first loss default guarantee. Uh, it is not a contingent liability in this case as it is in the supply chain finance or the channel finance solution. It is a kind of an equity investment that the anchor corporate will have. The way securitization is structured, when we do the pool, we, we tranche it. Giving you an example, it could be 100% of the receivables that we take, the pool, we tranche it into, say, 90 being the senior tranche and 10 being the junior tranche or the equity tranche of the corporate. As you can see over here, there is no onboarding or a KYC or an underwriting we are doing of your customers. So we don't know your customers essentially. And hence, we need the skin in the game of the corporate, and even the rating agency demands the skin in the game for the corporate. And that is where the FLDG or a credit enhancement, which is actually the equity portion that comes into play, for the rating of the pool to be higher than the rating of the corporate. I hope that answers your question.
Right, right. So when you say it's without recourse, then maybe to some extent there is a recourse portion there.
So recourse can be, if I may say, it may be, you may say that there has to be a reporting. So in case of a delay or a default, there is no reporting as such which will happen for the anchor. Now, it is not a recourse, but it's the only reason that we have this equity tranche is to have a skin in the game, without which this structure cannot proceed. Now, the credit rating agency will demand whether it's going to be a 5%, a 10%, or 15, or 20, so on and so forth. Once the entire pool of receivables has been identified and assessed, the only thing that we are going to check over here is your history with your customers in the past 2 years. How has the repayment been done over the past 2 years? And that is all we take from you.
Got it. Okay.
You had a question, yes. Uh, to clarify, you are selling to government agencies? Yes, so directly to government. So it's a state government entity or a private state, central government. So yes, that is open for a discussion. Now, what will happen with state government is that we'll have to dive deeper and see what kind of receivables are these. What is the general past trend? Is it a project related sale that you're doing? Are your receivables going to come in after 30 days or 180 days or 210 days, 210 days? We assess all of that. We see all of that. But yes, if I have to say, I won't say no, that we cannot look at it. We can definitely explore that. And if you have more questions on, and if you want to dive deeper, we have a booth over here.
Sure.
You can definitely walk up to a booth.
Sure, thanks.
Any more questions? Yeah. Right.
Is it regulated by SEBI, or is there any compliance which needs to be done over here?
So the formation of the trust, so the advising and structuring is going to be done by Veefin. The securitization as a product is regulated by RBI. So yes, there is a regulation in place.
Okay. So the rating agency is also something which is appointed by the RBI. So then that ensures the credit worthiness of the overall portfolio of the trust, so that the seller does not get impacted in the end.
I'm sorry, could you reiterate your question, please?
So the seller does not get impacted in the end. So the credit worthiness is maintained by the trust through the rating agency which performs the check.
So the credit rating agency will rate the pool of receivables. Rating agencies have different regulations, and obviously that is also governed. We will use the credit rating agency as, if the anchor corporate is rated, we will use that as the base rating agency and use the same rating agency to get the pool also rated. So the assessment in terms of credit worthiness, the only step that I can say right now is we'll see how the transactions have flown between you and your customer over the past 2 years. And the credit rating agency will then tranche the pool of receivables into senior, junior, and subordinate, or an equity tranche. And that is how it would work. I hope that answers your question. I still have 4.5 minutes on the timer, and I am more than willing to take any further questions that you all may have. Moving on to the next slide. I have already covered this in my previous discussion on the previous slide. Veefin Solutions, as I mentioned, we started as a technology service provider. So we use the India stack to ensure that we reduce the time taken to create a pool and onboard these customers onto the securitization program. From KYC adoption to documents check to AML verification or AML checks, everything is being covered by the technology that we deploy, being a leader in technology service provider on the supply chain finance side. This is my last slide. I hope I have reasonably covered all the questions that you had, and you have a great understanding about securitization. As I mentioned earlier, we have a booth. We are presenting over here. There is one more product which we are selling actively to corporates, which highlights the accounts payable and accounts receivable automation, and we could discuss that in depth at our booth. Thank you so much, everyone.
Thank you so much for the insights. And I would like to call upon stage Mr. Pulkit Goyal, CFO at Honeywell, to do the honors. Please put your hands together for Mr. Goyal.